Hey there! Today, Monday, December 12th, and there we are at the opening of the market, New York session, trading Nasdaq as usual. 2-minute charts already draw a Fibonacci extension, so the market is pushing high. As you know, this is a squeeze or a stop loss hunt. So always, you don't want to be at that moment taking a trade. It might reverse against you, again take you out. Or I'll always like a couple of minutes before getting in, unless we are some crazy scalper, or by saying crazy scalper, like skilled and professional scalpers. That's when you start at the beginning at the right by 9:30, which is the market opening hour. So here back to the 5-minute chart, and then you can see the RSI is going down, coming from the way up, going down. So I trace a line to line. Once they show this resistance and the other one is support, I'm gonna just adjust it right there to create a channel. And then the volume is this is 5-minute volume, so it's red, which means that it's a bearish one. So I'm expecting the market, the price will hit that area around the 11,670.64. We'll see, and this is based on our my analysis and strategy. So there we are, back to the 2-minute charts, and so the market is undecisive around that time always. So it's always now. If you were bearish, taking position bearish, it might take you out. If you're bearish right now, depends on where you entered and where your stop loss is placed. Whether either you are safe or not, that depends on your entry. If you are bullish, that's probably the time you can see this fluctuation of the price. You might think about going out, exiting the trade, because this area between the 50% and 61% of the Fibonacci is strongly and safely guarded by the bearish. So anytime the bullish push the price at this area, it pushed back down by the bearish. That's what confirmed the analysis and with all the Fibonacci trade retracement. Here is the 1 hour chart that I base my analysis on. I always like to start my analysis with a higher time frame all the way down to 2 minutes. Always like to take the trade based on the 2 minutes. I like the 2 minutes. Why the 2 minutes? Because simply the 5 minutes I found it is slower, and then the 1 minute is fast. So it's, you know, unless I'm going for scalping, that's something else. But now I'm not scalping, I'm day trading. So you can see the area here in my order book. The highest price after 2 minutes is around 11,715 or 1525 to 50. So around that area. So the market, or anytime could that area push back down. So that's mean for me is take the trade right there, bearish. So but I made a mistake, a rookie mistake. I pressed the market, I bought the market, the market price. I didn't place my order as usual, which the best price that benefits me or advantage for me, and that's what's been a disadvantage at the beginning. At that time, like, oh shoot, I should probably like take another contract, but I'm like, no, it is against my rules. I'm not gonna fix my mistakes. My mistake, I'm owning it. I'm not gonna fix it and go against my rules. For that, 1 contract is enough. Second reason, it's Monday, so you're not gonna go crazy on Monday taking 2 positions, 3, 4, 5, depends on your strategy, whatever, but not on Monday. Unless you're a professional, you know what you're doing, that's something else. But for me, when it comes to me, what I try to share with you guys, always go 1 contract, 2 contracts, and Tuesday, Wednesday, Friday, or for some setup I might gonna share with you in upcoming videos. If of course you subscribe, like and share, then hit the icon button or the bell icon button, and then that will keep you updated with the future videos. So that moment, yes, I might take the second contract, even 3 contracts, but depends. I take them, but I try to release them as when I go beyond a little bit and take a little bit of profit. I take the 2 contract or 1 contract is, and I always keep it 1 contract. There you go. So the prices it hitting back to this area again. I'm not stressed at all. You can see I didn't move my stop loss. My stop loss is placed right there. I'm not moving it. And the same scenario again is repeated. And the bearish people, all the bears are protecting this area and pushing the price back down. We just wait and see now. So everything now everything is out of your control now. You place your order, it's up to the market, and then when it's up to you, it's your strong mentality, strong psychology, and then how you cut your losses, how you manage your risk, and that's it. I like it. The minimum of for me, a good trade is the minimum of $300 profit. If I make the $300, I'm good. I'm happy with it. If I go beyond that, is a bonus. It makes my day still, but the $300 is the minimum amount of profit I like to go for. So market slowly now, it's showing some profits, depends according to my entry, the late entry or the mistakenly entry. That's all good. So now it's pushing down, showing around a little bit $50 profit, 60. So right there, it's pushing, baby. Yes, that's good. Keep pushing. I like it. It's a good feeling. Really good feeling when you do your homework and then you're ready for the trade and that's going the right direction as you predicted is good. So now I want to place my stop loss down beyond my profit, a little bit past my profits, which are around the $300. But at the 2 minutes candle closed and the new one started, so you can see the market jumped a little bit, and my stop loss was not the right place. I put it back right there, back again. So I just want to make sure before placing it, I'm not gonna roll it and it's gonna jump. Yes, I'm taking off the Fibonacci extension. No need at that time, at that moment, it's not needed. On that moment, I'm like, okay, well, let's place the stop loss exactly around the $300, and then just waiting for the right spot to place it. I went and looked at the 200 milliseconds, and there what I found a good spot right there exactly. So I'm just waiting. Is he gonna hit it? Is he gonna hit the target? And yes, the target's been reached and hit and filled. $500 profit. Again, it could be more, like 650, but the interest was so delayed, so that was my mistake. It's all good. So I'm getting rid of everything, so just keep the chart cleaner for next trade or next session, which is next day. So something to keep in mind, guys, psychology is 80%, or let's put it to 70%, and the 30% is strategy and the analysis. So this is trading. It's narrowed down to the psychology, which is the mastery of the self, and then the rest is your knowledge, strategy that you do, and then you spot these patterns and then set up over and over again, and you place your order right there. With that, guys, wishing you a beautiful day. Don't forget to subscribe and like and share. Remember always to trade wisely. Take care.